Hey everybody, excuse me, afternoon update. Anyway, so another ugly day, and I'm going to go back to SPY here because it's a better example of the majority, everybody. I mean, we all thought this was going to follow through to the upside this week because of the buying right into the close last Friday. And when I say that, I mean institutions, big money, because big money is what's driving this down like it is. So, where are we going to go from here? Well, possibly we're close to maybe a low for today. Maybe not the low, because, again, this is the power of what we call the void. Prices went up. And granted, this was a crazy historical price action to have this sell off here and then that reversal. You maybe the yen carry trade worries, and then the worries about, oh, it's going to be a recession, some economic report, and the nasty gap down, and then hold on a minute, maybe it was a mistake, and rally right back up again, and then gapping higher, never violating a prior bar's low. So here we are on the way down. Where is it going to stop? In reality, we can only make guesses. Um, just looking to the left because there's an unfilled gap down here. Today, 5,400, we've been focused on for a potential turn, where it's been holding here because there's a large open interest, and there was the highest volume um, in those options today expiring today, which tends to put a floor in the downtrend. So we're kind of hoping, thinking that this might spike down, maybe not a spike, but poke down under the low of the day and flip back up again for a day trading opportunity. And we'll just see how far it goes. Just going to turn around here and take a look at the AD line, which is at almost a minus 1500, which is quite negative. You typically do not get significant reversals when you have a minus 1500 AD line, especially on a Friday. That doesn't mean it won't bounce. So there could be a tradable bounce to make some money from that bounce here. We're waiting patiently to see if we can get a poke under here and a flip back up again. Ultimately, seems more likely it's going to go down, and who knows? It may go all the way back down. As crazy as that sounds, this move down was crazy. Maybe not so much so. We had the internals give us the sell signal. I think it was on this day, and this drop, and to reach trace all the way back up. That's crazy. And that's why I call this market schizophrenic. But this bullish day right there suggested it was going to take it out. So probably the majority of institutions are going to say all, but it's never going to be all. But many were caught off guard. They try to hold the 50 MA down again. We'll see if this holds. Qs look like they got to go down there and tag the 200 MA. There's a more significant support level down there. We'll see if that holds. Semiconductors under the 200 MA already. Kind of looks like it's going back down to that low. Probably not today. What would change that opinion? Well, if Monday we were to get a bullish 180 reversal and this would be a breakdown failure, we'd start thinking differently and do some longs or some put spreads. Right now, sellers are in control. Looking at the 5-minute chart, some stabilization here. It did break the back of the downtrend by taking out that pivot, and it's not uncommon to come down here and test the low again and maybe take it out and flip back up again. Ideally, this would be down at that pivot over there to the left on the 65-minute, but it's not. It's holding here for now. And I will point out, just looking at how we observe things, that here there was a momentum move. It stabilized. We got the little retest. It failed. Another momentum move. So while the momentum has stalled, it's just flat. To really get a low in place where we would say, okay, everything's coming together, you get a lower low where the distance between the last attempt to hold and then the lower low, things come closer together. So let me refine that. Where rather than getting a slowing in momentum or sideways price action within the downtrend, the momentum here stalled and it resulted in sideways. So what we look for is lower the distance between the lows are closer together. And those that use indicators, they say, oh, look, my indicator is showing a bullish divergence. Well, we don't need indicators. All we need to do is look at it the way I just explained. IWM is on some support. Looks like it's got to go lower. Here was an attempt to kind of flip up there. I've talked about hook patterns in the last few weeks. This is a sloppy kind of a hook, but all hooks are preceded by a momentum move, and then it comes down, ideally a further distance where the hook and the turn is not so close to a prior high, because there's going to be sellers there at that pivot, where the distance from the hooking to getting back up to there makes the reward to risk worthwhile doing. KRE holding up, moving down. XLF coming down, was showing relative strength. That looks like it's got to come down here to this base and the 20 MA. The diamonds 50 MA unfilled gap probably goes underneath it. Nothing is green on the day in the S&Ps. However, staples is the strongest again. Defensive. The next is healthcare, which is coming down. It's not up on the day, but it's down only a small amount, about 0.75%. Utilities, again, strong. It's at the top of the list. Real estate. All of these interest rate sensitive defensive sectors are doing better. Interest rates are dropping, starting to stabilize here. Could be a positive. And just going back here, I don't want to miss a turn. I'm patiently waiting with everybody else, but so far, it's just maybe it's going to go back down there. So we're waiting. We're only looking for a bounce here. It's a little after 2 o'clock, so the timing is about right. Could be 2:30. Be patient. I hope you're adhering to stops, because times like this is where you get taken out of the game. Money management is ultimately which will keep you in the game during the learning process. It will keep you in the game during rough periods, and it will clear up the majority of psychological issues that result from not having any money management. Yesterday, I sent an article. You should read it, on money management, trader psychology. It was primarily focused on day trading, because that's the most active, of course, and where you have more of the psychological issues that you're dealing with things throughout the trading day. Also provided a discount to the money management course. So consider it. As always, if you have any questions, email us, Greg and Dan at Master Trader.